Dear ladies and gentlemen, thank you very much for joining us on M.Video-Eldorado Strategy Day presentation, followed by Q&A session. Our speakers today will be CEO Alexander Izosimov and CFO Ekaterina Sokolova. And before we start, please draw your attention to the fact that some of the statements may contain projections or other forward-looking statements. For details, please refer to the second slide of our presentation, which is available on the main page of our website, M.Video-Eldorado.ru. And I would like to remind you that during the presentation, you can ask your questions in our chat. With all that being said, I'm now passing the floor to Alexander, who will start the presentation.
Hi, everyone, and thank you for joining us today. I'm Alexander Izosimov, and I have taken the helm of M.Video-Eldorado just a few months ago. So today, I would like to start by sharing with you my perspective on the business. We will continue then by outlining our business model and our current performance. And we will finish with our strategic plans, and we'll tell you where we intend to take this great business in the near future. Let's start with my initial impression. As one of my mentors said once, beware of the first impression, it might be the right one. So what is it? When you come to the company, you can't help but noticing that the company has a great leader mentality, and deservedly so. With its 500 billion rubles in GMV, our company is the leading consumer electronics specialist in Russia and is among the top 10 players worldwide by revenue. The focus which company puts on its customers and relentlessly tries its best to satisfy their ever-changing needs is nothing short of remarkable. With that attitude, the company has built a formidable loyalty base of over 70 million customers, of which 19 million were active in the last 12 months, making 56 million transactions. No surprise that prompted brand awareness here is an absolute 100%. What is also extremely encouraging is that despite its size, the company remains extremely agile. The company adopts well and adopts fast. Evolution of its online business can serve as a good indicator. While we are proud of our #1 position in Russia, we're even more happy about our leadership in the online CE business. Strong market position, agility in combination with financial prudence allowed us to evolve the company into a strong leader while consistently maintaining a sector-leading EBITDA margin. The scope of our operating network is equally impressive. Company's infrastructure, which is unmatched by any online player, allows us to cover 60% of Russia's population with the same-day delivery capability. Our logistics backbone, which has over 1 million square meters of fulfillment space across the entire land, ensures access to the most relevant and most popular assortment for our customers. Coming back to my agility comment earlier, this is clearly nothing new. It's part of company's DNA. The company began as a startup when 2 young guys opened a single store, and over the last nearly 30 years, it has grown into a mighty force. As you can see on this slide, the company has accomplished a lot by pioneering the market and constantly innovating in terms of technology, business model, and its approach to market consolidation. Another remarkable feature is company's execution capacity. The company has undertaken some major challenges, such as integrating Eldorado's and MediaMarkt's Russia's entire businesses, with a promise to deliver synergies over 6 billion rubles, and it met this challenge with flying colors. I'm not the only one to recognize the company's qualities. A number of respected international agencies have done so as well, judging by these examples of the different awards the company received last year. When the company consistently puts the customers first, continues to develop and innovate, the highest Net Promoter Score in the industry for the flagship brand doesn't come as a surprise, with Eldorado actually showing excellent progress as well since being merged into the group. As the saying suggests, when the going gets tough, the tough gets going. And it is absolutely accurate in our case. 2020 was not an easy year for anyone, and therefore the 2020 results do serve as a good litmus test for the company. And now I would like to ask Ekaterina to give us a snapshot of 2020. The floor is yours.
Thank you, Alexander. Hello, everyone. 2020 was a challenging year. that not only tested the company, but also accelerated structural changes taking place in the market. But the market worked its way through, and in some respects even thrived. In a nutshell, this transformation taught us a lot and positively affected our business operations. It was definitely a growth year, and we delivered strong GMV growth, mainly driven by online development, leading to increased market share both online and offline. If you look at total online sales for 2017 to 2020, we achieved an average growth rate of over 72%, and our market shares increased substantially in both the overall consumer electronics market and the online market. It's worth mentioning that we are by far the market leader with a share of 33% in Russian online consumer electronics retailing. We are already adapting to the changing market landscape and the shift to online. I would like to highlight the fact that our online sales are not concentrated only in Moscow and St. Petersburg or other large cities. They are evenly distributed across the whole country thanks to our nationwide infrastructure backbone. We achieved outstanding growth results in every region with an average of more than 95% growth year-on-year in 2020. 2020 was a challenging year for the company, as it was for everyone else. But we excelled in meeting the challenges and delivered outstanding results. The group not only handled all the challenges stemming from the pandemic, but also advanced to a completely new level. During the pandemic in 2020, M.Video-Eldorado demonstrated exceptional agility in operations and addressed every challenge it faced. We did this by introducing safety provisions, cost control measures, and innovative new solutions and initiatives. In terms of innovations, we introduced new last-mile partnerships, contactless delivery solutions, 6 modes of operational flexibility in stores, and remote assistance for digital purchases. And now I'll pass the floor back to Alexander to talk about how we are hacking retail with our unique approach to digital business.
Thank you, Katya. Hacking retail might sound a little cheeky, like a marketing slogan, but if you think about it, that's basically what every single modern retailer is trying to do now. Technology is shifting the ground under our feet, and only the companies that are agile and truly innovative will find the path to success. And we strongly believe that M.Video-Eldorado has a very good chance to do exactly that. We think that our hybrid model, supported by one retail technological stack, will allow us to hack the traditional retail and truly fuse the multiple touchpoints into a unified, frictionless customer experience. We believe that one retail is rapidly becoming a convincing and compelling digital story in the Russian retail market. Now, let me take you through our thinking. We will start with the analysis of the market we operate in, which remains very fast-growing and very attractive. Then we will go in great detail through our business model, and we'll show you how we are measuring our progress and what results we have achieved last year. Finally, we'll share our logic, strategic outlook, and what we are aspiring to achieve. Let's start with the market. Russia is one of the largest and fastest-growing markets for consumer electronics in the world. In terms of size, Russian market is worth more than $25 billion and is among top 10 markets globally. More importantly, the expected growth rate puts it in number 2 position, just behind Brazil, while other mature markets are not growing as quickly. As mentioned previously, the total addressable market for consumer electronics is expected to grow about 6% annually over the next 5 years. Naturally, this growth will be uneven across categories. However, it is important to note that it will be happening not only in the selected new categories and services, but also in the core of our business, with more traditional categories where we have strong market share and good margins. In terms of numbers, we expect the main categories to grow from the current 2 trillion rubles, reaching 2.7 trillion in 5 years, and expanding further to 3.1 trillion through growth of new categories and services. Main driver for the core of Russian consumer electronic market is low penetration, irrespective of how we measure it, either through number of products per household or as a share of wallet. The penetration of consumer electronic categories in Russia is still significantly lower than in the majority of comparable markets, and it will be driving market growth for the next 5 years. If we take a few examples to illustrate penetration of large consumer electronic products in Russia, we can see that across several large categories, Russia remains significantly behind both global averages and advanced markets. If we consider dishwashers as one example of such category, we can see that dishwashers are present only in 17% of Russian households. The comparable level of developed countries, such as France, could be as high as 66%. We have also observed that the recent growth in Russia was predominantly driven by premium products across all main categories, and we don't see any reason for this to change. Key reasons for growth in premium price categories is that on top of penetration growth, we also do observe the replacement cycle where consumers switch to products that offer better performance, such as ultra-high definition television sets with larger screens or smartphones offering more features. Our value proposition and positioning of our brands, as you will see later in the presentation, fits perfectly with these trends favoring premium goods. Our industry is one of the most innovative, and there is little doubt that the growth in new categories will be an important element defining further market development. Although categories such as gaming devices, drones, and smart homes currently represent a small share of our market, they are rapidly developing and outpacing the main categories. It is important to note that these categories are often more complex and do require some assistance. M.Video is extremely well positioned to provide such support. It already often acts as an integrator of new products and services, and will continue to develop this further. Main drivers behind the rapid growth of services include changing customer habits, which reflect both the general trends, such as healthy lifestyles, and the impact of the recent lockdown, such as home theater category and complex kitchen equipment. The market for value-added services will further enhance the development of all categories with average annual growth of about 10%. One of the most important points in our thinking is how the channel evolution and the competitive dynamics will evolve for the consumer electronics market in Russia. There are two schools of thoughts here. One school believes that most of the retail businesses will shift online, and the online world will be dominated by very few, very quickly growing marketplaces. However, analyzing other markets and looking at the likes of Best Buy, Fnac or Magazine Luiza, we can see that these specialists successfully evolve their businesses to capture growth online. Therefore, we share another line of thinking where low involvement utilitarian purchases will undoubtedly be owned by the marketplaces. But more involved categories, which often require expertly supported decision-making, will remain occupied by the segment experts in both physical and digital touchpoints. 2020 in Russia saw significant changes in consumer behavior, and no doubt it will drive the share of online-based transactions surpassing 60% by 2025. However, taking into account the resilience demonstrated by the traditional players and their ability to adapt to changing market environment, as well as the international experience I've just mentioned, we expect a very favorable evolution for our market share. In summary, we see that the Russian market is large and is enjoying fast growth, thanks to innovative and premium categories. This positions us very well to effectively serve our customers across all the channels. Now, let's look at what gives me such confidence that we will be able to successfully continue on our fast growth path. Being relatively new to the industry, it's always good to take a dive into the fundamentals of the business and try to understand what actually drives growth and determines success. At the risk of being a bit boring and didactic, I nevertheless would like to take you with me through that process. What is the main thing that makes our business tick? In M.Video-Eldorado case, the answer is obvious. It's the customer. The customers come to us to buy electronic products, and they expect three things: wide selection, best value, and convenience. They start their journey either by browsing the store or the app or the web. In either case, it starts with the discovery and evaluation of the available options. When the most suitable option has been identified, the customers settle the transaction and then receive their purchase. All of it should be done in the most convenient way, capturing the best possible value. If all of those things hang together well and we execute them with the minimal friction, the customers will grant us their loyalty. They will allow us to open communication channels. That, in turn, will allow us to incentivize them to come back to us and do it more often. What is equally important, they will become our ambassadors, helping us to recruit more customers, contributing to the ongoing traffic increase. Hence, we see ourselves being successful when we convert anonymous buyers into engaged, loyal customers who come back to us again and again and bring their friends along. One Retail helps us to realize all of those elements on a new and higher level. We can offer a better selection through an instant access to the online vendor catalog and third-party stock. We can help to make better choices by using our powerful AI personalization tools, supported by the expert consultants who are available anytime, anywhere through One Retail platform. We can help to settle the transactions at the comfort of one's personal online space, assuring capturing the best possible value for that specific customer. We can help to find the most suitable delivery or pickup option, targeting mind-boggling 15-minute order availability for most of the orders. With that, we are growing our loyal and active customer base even faster. However, the retail business is essentially a platform which brings together two sides, the consumers and the vendors. So apart from providing services to our customers, we do provide an invaluable service to our vendors in helping them to present their products and services to the customer. It is increasingly difficult for the vendors to fight for customers' attention and find efficient ways to let the customers to discover their products. It becomes particularly challenging when the nature of the product requires not just awareness, but includes the touch and feel impressions, as well as the need for some expert guidance in order to make the final choice. Hence, our ability to present and support the new and premium products, both on the shelves and online, are of increasingly great value for the vendors. Moreover, the more tools we have to guide the customers in their discovery quest, the higher is the impact of our involvement and stronger our ability to help the vendors to achieve their objectives. And One Retail provides us exactly with that. As a result, growing customer traffic drives further collaboration, which usually leads to an improved assortment, wider exclusive ranges, increased joint marketing investments, and, as a result, we become even more attractive in the eyes of our customers. Bringing our customers and vendors onto One Retail platform creates powerful momentum for our business flywheel, where very engaged vendors help us driving up satisfaction and loyalty among the customers, which, in combination, brings a very strong growth. That previous slide was a lengthy but an important explanation of how we view our business. It is important because it provides you with insight into how we think about our business priorities, which in turn determine our long-term aspirations. One of my favorite Buffettisms is that starting position defines your options. From that perspective, our starting position is exceptionally strong. Throughout its life, the company has built an imposing set of strong competitive advantages that position it extremely well to navigate this turbulent but potentially very rewarding market environment. These are advanced technology based on our proprietary mobile and web platforms, effective nationwide logistics infrastructure, which is unmatched by local competitors, strong brands, which help us to generate high organic traffic, and engaged people, our highly trained and motivated staff, ensuring best-in-class client service. In the words of the same Mr. Buffett, this business has a moat, and it's a really solid one. The behavior of our customers changes, and their journey becomes much more complex. Nowadays, a relatively small part of our customers stays pure and travels solely through either physical or digital touchpoints. The research shows that 73% actively combine both. And to make the issue even more complex, on average, our customer takes over 2 weeks and multiple interactions at different touchpoints to finalize the choice and make a purchase. Serving the hybrid customer with such complex and intertwined journeys does pose a mighty challenge. an ability to identify the customer at any touch point, understand what problem they're trying to solve, understand where they are in their journey, and as a result, an ability to offer the most suitable solution is the biggest challenge and the holy grail for any retailer. Hacking it requires a comprehensive technology platform that enables us to engage customers at the discovery stage, no matter which channel they choose, and keep them engaged across all those touch points through every subsequent stage. To address that, we developed One Retail architecture. It is based on a set of back-end systems that enables us to leverage customer profile data by easily accessing a full range of operational information from logistics to assortment to promo and campaigns. All of this data is channeled through our mobile platform to customers via online or mobile app and to the sales consultants through our employee app. As you could see, our mobile platform is at the heart of what we are trying to achieve with One Retail. This platform enables our consultants and our customers to access all of our stock management data, AI-based selection assistance tools, and payment and fulfillment options. Moreover, it enables and facilitates interaction between our consultants and consumers regardless of where they are. In other words, when our customers are online, we bring most of our in-store support and capabilities to them. When they are browsing our stores offline, they have full access to the power of our online platform, further enhanced by our in-store consultants. And in turn, we get much deeper knowledge about our customers and their preferences. This gives us the ability to generate tailored offers to address customer needs more precisely and to provide customers with solutions that offer the best possible value for them. On top of this, we can furnish our vendors with a full range of intelligence on the evolution of customer preferences, including their brand and product affinities. We have started rolling out our platform about 18 months ago. At the moment, we have reached about 50% penetration of our store network, covering all of M.Video stores. During 2020, the share of sales through the platform more than doubled, and now represents about a third of our total sales. Our customer app had over 4 million downloads and almost 2.8 million active users in the fourth quarter of the last year. That was 17 times more than at the moment of launch. This tells us two things. First, both apps are well received. And second, they do represent a significant share of our current business, which allows for a fairly robust assessment of its impact. This slide shows why we're so excited about the results of our mobile platform. The strong usage growth for both customer and consultant apps translates into significant improvement in traffic monetization due to our ability to engage customers in the right way. Our consultant app shows significantly higher conversion, along with well above average ticket size and number of units per transaction. Our customer app demonstrates superior results in conversion and checkout completion. Provided the sales through the platform on both consultant side and the customer side is much more effective and yields superior monetization, we will continue our strategic drive to shift as much business as possible onto that platform. In the midterm, we plan to almost double the share of in-store sales via the consultant app through both more active engagement of our sales personnel and rollout of the platform across all stores. In the long run, we see all of our transactions performed through that platform, and therefore an increase in the near future of up to 50% is certainly a large step in the right direction. Following our mantra of pursuing the best selection, value, and convenience, the assortment is playing a central role in our business model. When constructing our assortment matrix, naturally we base it on the most popular items. However, a significant part of it is also differentiated by the product exclusive to us, particularly in the premium price segments, as well as by the categories which are expertise heavy. Another important operating focus is the pursuit of quality. We do exercise very tight quality control of our stock, and about 80% of our purchases are made through direct contracts with the manufacturers. This certainly strongly differentiates us from most of the marketplaces. Our offering enjoys by far the best quality perception. Even if we are not the leader in terms of SKUs yet, our selection covers most of our customer needs and does so with superior quality. While many retail companies talk about price leadership, few of them disclose what they really mean by this or how it affects their profitability and customer loyalty. We want to be more transparent about how our pricing creates shareholder value and keeps our customers happy. Yes, we constantly monitor the market in order to keep our prices competitive. Yes, we match the prices offered by other large online and offline players and can guarantee the best price. But our sheer size, purchasing power, and brand recognition have such an impact on the market that it is more often the case that other players adjust their prices to match ours rather than vice versa. That's why our price leadership is more about price-setting capabilities than chasing someone else's low prices. We do not believe in low prices as such. Low prices are a very poor anchor for customer loyalty, but we believe in smart prices, which our loyal customers can get via bonuses, promos, and frequent purchases. Our prices will only get smarter as we roll out more artificial intelligence-based pricing tools and move deeper into personalized shopping. What is also important to note here, that our vendors do share this philosophy and are engaged with us to maintain price discipline on the market. Now, let's switch the gear and look at our work with the vendors. As the vendor base in our sector is rather narrow, the collaborative nature of our relationship with the vendors is essential to our success. The attractiveness of our brands does rely to a large extent on our ability to secure not only the breadth, but also the quality of our offers. Hence, our ability to secure a wide and exclusive range of products is strongly conducive to building popularity as a shopping destination in our category. In addition, managing the terms in such a way that would allow for maintaining profitability throughout the sector is an important part of the equation. So we must find the right balance between maintaining competitive pricing and preserving the margins, avoiding the value destruction for everyone. And that is hard to achieve without vendor participation. The sheer pace of innovation and news in the category poses a challenge in itself. When multiplied by the rapid evolution of the channels and communication platforms, it becomes a mighty task for any participant. Hence, we do focus a lot on developing solutions, both on and offline, which engage our vendors and help them to cut through the clutter. On the next few slides, I will try to illustrate these streams in more detail. Our collaboration with vendors extends also into our joint marketing efforts. As our store shelves act as a major touch point for the suppliers to promote their products, vendors do co-create and financially support most of our marketing and promo activities. Key vendor marketing activities include personalized in-store brand zones, corporate events, and media advertising. Apart from being financially attractive, this type of collaboration helps us to continue to build perception of us as the main destination in our category. Currently, we have over 400 vendors on our roster, out of which roughly half were active in 2020. Out of them, 15% accounted for 80% of our business. So it is a very concentrated business. However, the group is a very important partner for all the major global vendors as well. On average, we generate 40% of the revenue for the top 7 global consumer electronics brands in Russia. As you can see, the concentration and mutual dependence is quite high. Such interdependency calls for developing much more intricate and long-lasting relations, which extend well beyond most obvious benefits derived from our superior purchasing power. What we want to have is high sticking power. If we succeed, and so far we do, it becomes a great foundation for ongoing collaboration and opportunities to find even more interesting solutions. While the product cycle of our business enjoys longer history and therefore more established, the service side is relatively new, but it carries an enormous opportunity. The transaction and other financial services are the most obvious avenue for growth for us. Provided the capital nature of the main purchases, it is natural to target credit services, expanded warranties, and insurance coverage. We do it now, but we'll certainly continue to drive this dimension further. The involved nature of the main transaction very often opens our customers to continue the dialogue and supplement their purchases with the additional services. This provides us with an unparalleled ability to offer value-added services to cover the full spectrum of customer needs in services on a shopping path from lending and insurance to installation and even recycling. Actually, recycling increasingly is becoming one of the very important services. Needless to say that availability of the adjacent services allows us to enhance customer loyalty and significantly contributes towards overall unit economics. One of the services which deserves special mentioning is our delivery and installation service. On one side, this is probably one of the oldest services we provide. On the other side, it still remains under-leveraged. Last year alone, we completed about 5 million deliveries, but what is more interesting, we have completed more than 460,000 installations. It means that we had almost 500,000 home visits where our engineers were playing a role of a trusted experts. While it is a great revenue stream in its own right, this remains an untapped opportunity to further enhance our sales and establish deeper and more trusting relationship with our customers. And we certainly will pursue this in force. Our aim is to make it as easy as possible for our customers to settle transactions, whether they are on our platforms or in the store. So far, our focus has been on developing point-of-sales credit and cashless payment capabilities. The company uses Credit Broker as the main channel to offer loans from 12 financial institutions. All that worked well, and our share of credit sales was 17% in 2020. We believe we can do much more by further automating the process and establishing new partnerships. We have also been driving the cashless environment. As we are trying to move away from cash transactions altogether, an installment payment option is now a standard feature across the touchpoints. Another indicator of our progress here is the share of contactless payment for deliveries, which has reached 60% in 2020. All the credit instruments that we provide are extremely important, and that's where we have better opportunities than many other players. Now, let's move to fulfillment. This aspect of retail and e-com operations is probably the one which will make it or break it for most of the players. The fulfillment challenge in Russia, due to its sheer vastness of the country and relatively underdeveloped logistics infrastructure, for many newcomers becomes a prohibitively expensive endeavor. The challenge will be further exacerbated by the prevailing trends. We believe that the overall market development will be more and more indulging the here and now consumption trends. It will be leaning towards a combination of much faster, more reliable, and more precise delivery services across the country. And from that perspective, we are very well positioned. If we look at M.Video from the customer's point of view, we'll see the following. If you live in one of the 280 cities where we have stores, which is 60% of our population, you can have most of your orders delivered the same day. When I say most, it is 85%. Moreover, 34% of all the orders can be ready for pickup in 15 minutes. Clearly, this is our current level, and we have just started. We will continue to drive our fulfillment capabilities to significantly improve both the speed and the quality. What allows us to deliver this level of service is our very strong infrastructure, which the company has built over its life. We've invested over 150 billion rubles. Our infrastructure includes 1 million square meters of warehouse space spread across 9 major distribution centers, 58 regional mini distribution centers, and over 1,000 stores. This allows us to keep stock very close to where it's needed. 46% of our inventory is in stores, which means that it can be ready for pickup within 15 minutes. That is our base on which we will continue building superior fulfillment service level. Another strong element of our strategy here is the partnerships. To shorten the time and to have enough flexibility on our last mile, we're constantly expanding our delivery partnerships. When combined with our underlying infrastructure and unmatched stock availability, it produces completely different level of service. So far, we have talked about market development and our business model, and also about how we have been developing our mobile platform and our logistics. But we haven't said anything about our people. The company currently has 30,000 employees. But what I would define as a strong asset is not the size of our workforce, but its quality. To be even more precise, it's company's ability to consistently recruit, retain, and develop high-quality sales associates and office staff. The group's rate of employee turnover, which is the lowest in the industry, combined with one of the highest rates of employee engagement, both for Russian and global retail markets, are great manifestations of that capability. Another strong and unique feature of the company is its brand portfolio. It's rather rare that a retail operator would operate successfully with two brands. Both brands do have very strong heritage and are among the most recognized in Russia. They do address fairly distinct consumer segments, with M.Video providing the widest assortment and highly personalized experience and wide variety of complementary services. Eldorado positions itself as the place where one can get accessible products, strong deals, and all of that in the more accessible street format. Eldorado is more flexible and forgiving brand, which allows for more experimentations, including assortment outside of consumer electronics. Dual brand strategy provides us with much more flexibility on how we respond to either competitive moves or to economic shifts. It also gives us room to be much more adaptive with the store formats without compromising the flagship brand identity. This allows us to continue to roll out our network to meet the needs of both thinner market and our logistics. With all that, both brands utilize absolutely unified back-end, and that enables us to leverage scale and avoid most of functional overlaps. Brand investment and consistent brand building over the last decades produced very strong results. It is no surprise that the group enjoys an unquestionable top-of-mind position in all awareness-related metrics in Russia. As we said at the beginning of this section, our main goal is to convert anonymous occasional customers into our loyal ambassadors, and here you can see where we are at in this quest. The combination of the superior quality of our customer offering, quality of our service level enhanced by our mobile platform, highly competent and supportive people, and attractive and highly recognized brands. All of it together results in a very high Net Promoter Scores. More importantly, they are not just high, but they continue to increase. Our objective is to build a large base of loyal, engaged customers. Even if we are far from being perfect there yet, the results, however, are very promising. The Kahoot! Analysis shows that we are able to retain over 30% of customers as active even after a 5-year period. This leads to constantly increasing share of sales, which is generated by our loyal base, which in turn leads to better financial metrics. So that is the M.Video-Eldorado Group investment story today. Now, before we move on to the strategy section and talk about how we're going to continue hacking retail to deliver growth and value in the years ahead, I will hand the floor back to Ekaterina to give you an overview of the fourth quarter and the full year 2020 operating results that we published this morning.
On the next slides, I will cover the key highlights of our operating results for 2020, which I think underscore how successful our One Retail model has been at addressing the rising importance of online in the CE sector, especially in the context of the COVID-19 pandemic. Despite all the challenges, we managed to achieve strong operating results in 2020. Our GMV increased by 15% and exceeded 500 billion rubles. Growth even accelerated in the fourth quarter of 2020 to 19% year-on-year. Robust GMV growth was driven by a rapid shift towards online sales. The share of sales from our online platform almost doubled in 2020 and amounted to 60% of GMV, up from 33% in 2019. In the fourth quarter of 2020, our share of total online sales reached 64%. In 2020, we accelerated our shift towards a mobile-first model. Our mobile platform saw explosive growth. In order to present this in a more relevant and transparent way, we are introducing a new approach to our total online sales breakdown. The two main elements of total online sales are web platform and mobile platform. Web platform includes sales from website, marketplace, manual orders, vendor catalog, and contact center. Mobile platform consists of customer app, previously known as mobile app, and consultant app, previously known as RTD, or real-time dealing. Now let's dive a bit deeper into the numbers. In 2020, the group experienced explosive growth of online sales across all platforms. Our total online sales increased by 109% in 2020, reaching 300 billion rubles. Our mobile platform sales consisting of customer app and consultant app increased by 152% in 2020. Customer app sales increased by over 15 times. Sales through consultant app increased by 123%. Our share of sales through the mobile platform amounted to 51% of our total online sales in 2020 and reached 61% in the fourth quarter of 2020. In 2020, the number of one retail transactions increased by 55% and reached 23.7 million, or 42% of all transactions, up from 27% in 2019. The share of identified transactions reached 82%. The average ticket for one retail transactions is 46% higher compared with non-one retail transactions, 11.7 thousand rubles versus 8,000 rubles. As a result of the growing share of one retail transactions, the average ticket for the group increased by 16% to almost 9,000 rubles in 2020. In the fourth quarter of 2020, the average ticket amounted to 10.2 thousand rubles, meaning year-on-year growth of over 20%. Brand power and previous experience are stimulating massive traffic to our online platforms and offline stores. In 2020, total traffic, including our stores, web, and mobile platforms, amounted to 1.2 billion visits. Apart from that, we have a huge loyal customer base of 72 million. All this converted into 19 million identified active customers in 2020. The number of one retail customers increased by 79% to almost 8 million, or 42% of all identified active customers. Once again, by one retail customer, we mean identified and authorized customers using either customer app, consultant app, or web. By authorization, customers get an access to all one retail advantages. As we mentioned earlier, our stores are an important part of our one retail strategy and logistics infrastructure. Moreover, in-store fulfillment is the most cost-efficient option. Despite explosive growth in online sales, over 90% of orders were fulfilled in the most cost-efficient way, using our in-store infrastructure. The number of pickup orders increased by 77% in 2020, including 2-hour express delivery using partner taxi services. This wraps up my presentation of the operating results. Now I will hand over to Alexander to talk about M.Video-Eldorado Group's strategic vision for the years ahead.
Thank you, Katya. 2020 really was an impressive year for the company, which helped us to understand the power of our business model and our technology. Now, let's talk about the future. Please allow me to repeat our strategic framework. First, there are 3 essential customer requirements that are fundamental to our business: widest possible selection, customers' ability to capture the best value, the convenience of the process. Second, we address them through the key elements of one retail process: discovery and choice, transaction, and fulfillment. And third, we support it with our competitive advantages: technology, logistics, brands, and people. This is how we think about our business. While any strategy plays quite a utilitarian role of focusing the company and helping it to prioritize its resources, it also plays an important inspirational role. For that, we have defined our aspirations, which we will relentlessly try to achieve, although understanding it might take more than one strategic cycle. First, we aim to be able to cover all the consumer electronics-related needs. To do that, we will offer the widest selection of goods and services on the market through both 1P and 3P business setup. At the same time, we want to make sure that we are not just providing access to a large number of SKUs. We want to enable our customers to find the most exciting and innovative solutions that the industry has to offer. We want to be unquestionable #1 destination on the consumer electronics market. Second, we want our customers to be able to use our mobile platform for any interaction with us, whether it is search, consultation, transaction, or tracking your order. And we want to be able to provide it in such a way that whether the customer is in store or anywhere else, it would be the same smooth and consistent service. Last but not least, it's fulfillment. This is one of the most difficult elements of a business in any country, but the sheer size of Russia turns it into an epic challenge. The overall trend suggests that the expedience of order availability will become a key competitive battleground for retailers across the channels and formats. That is why our aspirations are very high to have any order ready for pickup or delivery in 15 minutes. This is clearly a challenge, but we are going to work relentlessly to move in that direction. These aspirations define very clear vectors for our development efforts. We strongly believe that the progress along those lines we target for ourselves in the next 4 or 5 years will secure our position as a main destination in Russia's consumer electronics market and will yield a significant increase in our loyal customer base. This in turn will enable us to double our business from current 500 billion rubles to 1 trillion by year 2025. It is great to have aspirations, but as they say, the road to hell is paved with good intentions and unrealized strategies. To make it happen and to achieve our first hurdle of doubling the business and growing over 1 trillion rubles in GMV, we have developed a set of fairly detailed strategic programs, and I would like to take you through some of them. We start with one of the most important aspects of the customer journey: discovery and choice. Here, our aim is to develop an environment where our customers would always be able to find solutions to their problems. Moreover, we want to give them an opportunity to do it in the most efficient way. It will be 2 groups of efforts here. First is selection. We want to provide the widest possible selection for our customers. And to that end, we want to expand our core assortment 3-fold in the midterm. Second is choice. We also believe that customers will benefit from structured assistance with navigating and making choices in the constantly expanding universe of consumer electronic goods. Let's take a look at this in more detail. Currently, we operate 75,000 SKUs, and as we have already mentioned before, this range quite efficiently addresses most of the needs of our customers. There could be occasions, however, when customers can't find what they're looking for in our stores, and we face the risk of losing them to a competitor. We want to build a position where customers know that they can use our brands as a logical entry point into the category, and that even if they can't find what they're looking for with us, we will help them to locate it. To achieve this, we plan to introduce more consumer electronics and related SKUs by further developing our vendor catalog and our endless shelf, as well as launching our own 3P marketplace with primary focus on consumer electronics. As we discussed earlier today, we see that market development will be driven by innovative products. The consumer electronics industry is probably one of the most innovative industries in the world, and new products, services, and solutions will keep being introduced. We also observe that these solutions are becoming increasingly complex, and many of them will require some integration, often with the multiple vendors. However, the more complexity there is, the better it is for us, as we are in the best position to help our customers. Expert advice and adjacent services are becoming increasingly relevant in this context. We have always been strong in these categories, and we are well positioned to capitalize on this and to help our customers to discover. Currently, we see that our share of innovative and premium products is somewhere around 20%, and we want to increase this closer to 30% in the midterm. These products include, but are not limited to, smart home installations, remote security services and monitoring, all sorts of home robotic appliances, healthcare wearables, and so on. Navigating in this increasingly fragmented, intertwined, and rapidly changing world is becoming more and more demanding, even for savvy consumers. We believe that our mobile platform will help us to make the customer journey much more effective and rewarding, and we see its impact wherever we install it. To make shopping even easier for all of our customers, we will continue to roll out our mobile platform across our entire store network. We started this process a year and a half ago, and we plan to cover most of our stores relatively soon. Naturally, we will continue to improve the functionality of the applications for both our consultants and our customers. We will continue adding new functionality to address evolving customer needs. Of course, one of the mobile platform's essential and unique capabilities is digitally assisted consultations, which we launched this year. As we have learned during 2020, the ability to have an in-person expert-level consultation with our sales assistants will help customers make faster and better informed decisions. As we often are dealing with expensive purchases, the ability to share responsibility is an important psychological aspect of the purchase, making remote support even more impactful and valuable. Digital support is a differentiating feature of our platform, and we will continue to expand the technology behind it by introducing more formats. Assisted purchases do show better results in terms of check size and number of items. By expanding the usage of such digital support, we aim to double the number of purchases completed with its help, and this certainly will make a sizable contribution towards our growth plans. Mobile platform is the most powerful element in our toolkit, and we will continue our effort to migrate our customers on it. Therefore, our initiatives will be focused on enabling full customization and personalization of our offering, tightening the integration of all transaction points by launching a single basket, providing multiple payment options to ensure easy checkout. We have a lot of experience and expertise in price and assortment management, and now we're taking it to the next level. With the use of our new AI-driven toolkit, we will provide a fully personalized offering for each one retail customer, making sure that nearly every particular transaction provides the best individual value for every one retail customer. As we try to check customers in as early as possible, access to personalized offers can start at the very beginning of their journey, in the future, even before customers formulate their wishes. These tools will allow us to drive further customer satisfaction and loyalty while maintaining our high margins. The One Retail platform offers a solution that combines all transaction points, namely the website, the customer app, and the consultant app. At the center of this process lies a single basket. This is basically a basket that the customer can fill and modify through any interface they choose, physical or digital, at any point in time of their journey. The feature is extremely important for the overall customer satisfaction. And while it might sound trivial, it is anything but that in execution, which aims to deliver consistent performance across all touch points. In our strategy, we do assign a high priority to increasing the robustness of this solution, while enabling at the same time a variety of additional checkout and fulfillment services. Payment solutions do represent a crucial part of the journey as well. As customers build their baskets, we aim to enhance the settlement at any touch point so that all baskets are successfully checked out, regardless of where the customer is located or their payment preferences. To do this, we are constantly expanding the payment and credit options available to our customers, and also making them less and less cumbersome. For example, we plan to have pre-approved credit limits for every identified customer, so that they can purchase goods with a loan or by deferred payment as quickly and easy as with any usual transaction. The same goes for the virtual credit cards and instant credit accounts. Certainly, we will be leveraging our good relationship with all the banks we're working with. And the key challenge here is to get completely different level of agility, which would allow us to quickly try and discard or scale various options. The battleground in the e-commerce now will be the speed and accuracy of the fulfillment. We think that here lies one of our core advantages, our store network. Using it, we want to ensure that the vast majority of orders across the country are available in 15 minutes. And at the same time, we want to offer our clients a wide set of options to get their orders delivered or picked up, so as to maximize their convenience and satisfaction from the overall shopping experience. Our key initiatives here are split into three parts. First, further scaling our network to provide flexibility and increasing the adaptability of the logistics platform. Second, further enhancing the last mile experience. And last, we also aim to develop advanced complementary post-transaction based services. As we have discussed before, both the speed of the delivery and its accuracy will be key differentiating parameters for industry in the future. We currently cover 60% of the population with the same-day order availability service level, and we want to be better, much better. To achieve that, we will continue developing our presence across the country by adding over 100 towns to our network, and this will take our population coverage to over 70%. We will do it mainly by continuing to roll out our smaller store formats, which we dubbed as Eldorado 250, which has proven to be quite successful in 2020. Increasing coverage is a strong step, but it is not enough. To achieve a leap in the next 3 years, when over 50% of our GMV is available for 15-minute collection, we will have to not only expand our presence, but substantially improve the effectiveness and efficiency of our stock management. Thus, we put a strong emphasis on the technological aspect of our logistics operations, including AI-driven technologies, which will significantly improve our ability to place the inventory with more accuracy and manage it more efficiently. The last mile experience will remain an important part of our cooperation with partners. To that end, we intend to continue to expand our cooperation with the pickup points, aiming to increase our access to over 100,000 locations. Our partnering with the taxi delivery services shows early signs of success, and we will, of course, continue to develop our work with all sorts of courier services, increasingly engaging more environmentally friendly options like pedestrian and bike couriers. We will also invest in improving our end-to-end real-time tracking of orders. This will give us an ability to amend the time of delivery in order to better synchronize with customer schedule. Whatever we do to achieve our aspirational targets, it will be driven by technology, and therefore scaling our in-house software development capabilities will be essential to our success. As the leading retailer in consumer electronics, we are obviously not novice to the software development. Historically, the company made substantial investments in IT, which allowed us to build a very reliable, large-scale operation, which successfully supported our network so far. However, the times are changing, and we do need to secure speed and agility with which we bring new features and new services to the market. This demands changes both in enterprise architecture and the approaches to software development we use. I understand that the words agile teams and microservice architecture are probably among the most abused words nowadays, but that doesn't make them less relevant. For the next round of system development, we will focus on pushing forward mobile platform and seamless space for One Retail, development of consumer electronics marketplace solution, and further development of AI-driven predictive instruments for both stock management and pricing, as well as migration of Eldorado onto One Retail technological stack. These developments will be done mainly in-house and on the basis of microservice-based IT architecture. A big change for us will be a shift away from the project and release-based approach to the product team one. We have started that process a while ago, and its early results give us enough confidence that this organizational change will be extremely accretive to our success. It is important to note that we design our One Retail platform as a detachable and transferable, which will certainly allow us to explore options in the future to apply it to the retailers outside of the consumer electronics segment. Our new approach will require a significant shift from outsourced to in-house development. We foresee that we need to double our IT force already this year, which will lead to the share of in-house development to well over 50%. In the midterm, this trend will continue by pushing this number closer to 70%. Recruitment of the IT force on that scale is a formidable task on its own right for any company. We do appreciate the scale of this challenge, and even if we're handling it well so far, judging by our progress in the first quarter, we understand the importance of cultural adjustments we will have to make. Our strategic ambitions are big. For the business of our size, to double it up in the space of 4 or 5 years is a challenge. But we are far from just dreaming. Yes, we do have our aspirations, but we also developed a clear set of operational targets to track our progress towards our main goal. We are quite certain that our investments and effort will allow us to increase the number of loyal active customers to 25 million, with more than 85% of them becoming One Retail platform users. Growth of our service levels, together with expanding One Retail reach, will lead us to over 1 trillion GMV in 2025. We also are fairly confident that we can deliver this growth by staying within the boundaries of clearly defined financial framework. We will maintain our EBITDA within the historical corridor of 5-7%. We will keep our net debt to EBITDA below 2, and we will realize our technological and expansion goals with the CapEx staying below 2% of GMV. We also do commit not to hoard cash and to distribute whatever we do not deploy to the shareholders. Hence, we have adopted new dividend policy targeting distributing as dividends 100% of our net income. The strategy which we presented today is focused on developing what we know very well and can execute with a reasonably high certainty. We called it hacking retail, as with aggressive deployment of One Retail platform, we're blurring the boundaries of the traditionally defined channels. However, the correct name for it would be hacking consumer electronics retail, because we speak only about scaling up the platform within the boundaries of our current category. And that is absolutely justified, as the market still offers an ample room to grow and to do it profitably. We do not believe that it would be productive to build precise models trying to describe the future business past 5 years from now. Neither business environment nor the geopolitical situations are very conducive for that. What can be productive, on the other hand, is to start building capabilities which will help us to perform in 4 or 5 years. And that is what we are trying to tell you with this page. There are 2 parts to it. First, the nearer future, and our drive to develop additional services which we can effectively provide and promote to our customers. Some of them we're already trying. Some are only on the drawing board. None of them are large enough to warrant significant scaling investments yet, but things might change very fast, and we have to be ready. The second part of this slide is probably more fundamental. It predicates on the assumption that consumer electronics is not the only category, and we are not the only player who can benefit from a powerful technology which leapfrogs a retailer to a state where it can deliver a full benefit of a hybrid model. I'm talking about taking One Retail beyond its current status. As I have mentioned, we are currently developing it with the view that one day it can become a standalone technology, which we can deploy in different formats outside our traditional consumer electronics market. We do believe in the bright future for the company, but we also accept the fact that we share the responsibility for the future for us all. We wholeheartedly embrace the philosophy that the only way forward for us is to remain focused on the sustainable development of our business. But to be absolutely honest, while we do share the values of sustainable development, we are at the beginning of the journey. At the moment, the company does have an approved ESG strategy, along with some detailed targets, and we will be introducing a number of specific products and projects to achieve those targets. However, we have currently engaged E&Y as the most recognized ESG expert on the Russian market to help us to develop more detailed and tangible program. This program would allow us to move from multiple but disjoint projects that we have now towards a coherent program which would be incorporated into all aspects of our business. As a leader in our sector, we have always taken sustainability seriously. We are committed to a healthy environment and thriving communities, so we can continue to build the future to be proud of. We have reviewed our entire value chain and focused on the areas with the biggest impact on the world and our company. And those are the planet. To improve environmental performance in our own operations and supply chain, people and communities, to provide secure and inclusive employment and make a valuable contribution to the social development. Customers and technologies, to make sustainability an embedded part of our digitalized and offline operations. Our ESG priorities are in line with the United Nations Sustainable Development Goals. They are designed to tackle shared global environmental and social challenges by focusing on the 5 areas where we can deliver the most value for the world. As a result, our ESG priorities aim to address risk and lower our impact, but they will also create shared value for our partners and communities. To bring ESG truly to life, we need to do a few things. We need to develop the framework, develop relevant policies, establish strong governance framework, and establish clear metrics how we measure our progress. Of course, we cannot achieve that without full support of our stakeholders and the board, which brings me to our corporate governance. The company has a long and good track record as a public company after its IPO in 2007. Adherence to the best global practices in corporate governance remained our guiding principle. Following that, we intend to strengthen our governance structure by implementing changes to the composition of the board. New board of directors will include 4 independent directors, 4 representatives of the shareholders, and a chairman. The board will rely on 3 permanent committees: Audit, Remuneration and Nomination, as well as Strategy and Digital Transformation Committee. The first 2 will be made up entirely of independent directors. We are supported by a prominent shareholder base, which includes the leading Russian financial investors of MAR and the leading European retailer Seconomy. Any savvy investor will tell you that no matter how good or promising your ideas are, your chances of success are defined by the quality of the team. One can say, of course, a standard phrase that our top management team, comprised of industry-leading professionals with many years of relevant experience and with a diverse international background in leading global companies. It's all true. But it doesn't convey the vibe that this is the team which built the market leader, the team which won many times but still is hungry for more. It is a team who wants and will hack the retail as we know it, and will build a new and much better way of helping our customers to navigate in the world of technology. Before we move to Q&A, I want to recap. Hacking retail is what we have been doing for the last 2 years, and it delivered. Rolling out one retail platform has powered our transformation into a business that is in a great position to help consumers to discover, select, and purchase the products they want, no matter when or where or how they do it. Looking ahead, we want to expand our assortment to new categories and services to be able to cover literally all consumer needs in consumer electronics. We strongly believe that our mobile platform allows us to bring our services to a new level. And we want to ramp up its use so that all transactions are conducted that way, and we can serve our customers in the best possible fashion. And we want to be a retailer that can offer its customers 15-minute availability for all orders. No one else can do this. Last year, we already offered it for 34% of the orders, and we know how to move it forward to a much better level. By delivering on these aspirations, we are confident that our midterm target of doubling the business is absolutely possible. So, now you've heard our story and our plans, and we'll be happy to answer your questions. Thank you.
Shop online or at a store. When choosing and purchasing consumer electronics, most Russians use both. M.Video-Eldorado offers customers a seamless shopping experience. Regardless of what combination of mobile app, website, or visit to a store their journey requires. We hack retail. And with our One Retail mobile platform, enable customers to choose the most convenient way to discover, select, buy and receive their purchases. Nastya is always putting things off until the last minute. She urgently needs a gift for a friend. Next day delivery is the best she can expect from a marketplace. At Eldorado, Nastya can pick up her purchase right away, or request delivery by taxi and receive her order within 2 hours. This level of service is possible thanks to the unmatched scale of our infrastructure with deep penetration in regional markets. Our One Retail online platform unifies more than 1,000 stores and 67 distribution centers that we operate. Thus, we cover 60% of Russia's population with 24-hour stock availability. Irina's washing machine is broken. She wants to order a new one without visiting the store. M.Video's One Retail mobile platform connects customers and consultants' mobile apps. So Irina can get assistance and personalized offers at home via her smartphone. The M.Video sales consultant identifies Irina in his app and sees her search history, profile, and available discounts. Using the customer's profile, our artificial intelligence technology suggests a washing machine that will meet all Irina's needs. Customers can also apply for a loan through the app, as well as get additional services, installation, insurance, or recycling. Online customers who speak with a consultant and receive a personalized offer are more likely to make a purchase. Maxim always shops online. He is considering buying a robot vacuum cleaner, but he does not understand how they work. Besides the color and price, what's the difference between various models? It would be nice to test it out himself. Our sales consultant identifies Maxim right next to the shelf via One Retail online platform and sees his profile and search history. The consultant's online catalog contains all the necessary information to compare the different models and help Maxim make the right choice. The mobile app helps the consultant quickly compare prices for similar products in other stores and offer the customer the best deal, taking into account any available discounts and bonuses. One click and the entire order appears in Maxim's app. Sophisticated mobile consultation capabilities lead to increased in-store sales, higher average check, and improved customer loyalty. We combine the advantages of online and in-store capabilities in a single platform with convenient smartphone access. We update online customer profiles with data from our stores. This one-of-a-kind knowledge of our target audience, combined with innovative data-driven solutions, allows us to offer customers exactly what they need. And they do appreciate it. Loyal customers become our ambassadors, helping us to recruit new clients. All this empowers M.Video-Eldorado to create value for key stakeholders, building long-term relationships with customers and vendors while delivering growth and profitability for shareholders.
Good morning and good afternoon, ladies and gentlemen. Thank you for joining us at this virtual strategy day for M.Video-Eldorado. We are starting our Q&A session, and while Alexander and Ekaterina have been delivering the presentation, we have started getting questions as well, and we have grouped those into a few subjects to optimize the rationale and the thinking for the benefits of our analysts and investors. Starting with strategy, and the first question is, how would you describe your strategy in 3 or 4 bullet points, whether it's growth or shareholder return? That's probably a question to me. Well, I don't think that's the right way to put this question forward. Our strategy is so exciting because it allows us to achieve actually both. Our ambition to growth is huge. We would like to double our business within 4 or 5 years ahead. At the same time, we explain it that we are going to provide sufficiently high shareholder return by maintaining our EBITDA margin within 5 to 7%. We have disclosed our dividend policy today, and we're going to pay 100% of our net income. The combination of both elements makes our strategy truly unique. Okay, the next question would go to Dagmar Ivanova then. Why is your One Retail platform technological, and what makes it different from other omnichannel players? That's a great question. One Retail is first and foremost about the technology. The heart or the core of this platform is about the mobile element of it, which is also comprised of the client app and also store assistant app, and they can work together. Importantly, all of that is backed by very strong infrastructure, be it logistical infrastructure or in-store infrastructure, which we have more than 1,000, as you know. Moreover, it's about our experts who help advise our customers, and there are 15,000 of experts available in the stores. We have predictive business analytics as well as other instruments on hand, which makes this solution as unique as possible. I can tell you this as well. There are 3 players who benefit from our One Retail approach, starting with our company, of course. We can see the clients authorized and registered with the mobile platform, which enables us to understand their needs and their previous purchases. We know their shopping mission they would like to cover. At the same time, we can use the AI tools to address this client in just the right way with a personified offering on the content side and also on the product side and, of course, the price side. Another beneficiary to One Retail platform is our partners, the vendors who would like to have more direct contact with the customers and more direct knowledge of them. One Retail technology does allow our partners, the vendors, to get closer to the customers, see all the nuances, and then address their product mix, their assortment, the pricing proposition, and introduce innovative products. And the most important beneficiary of all in One Retail platform is, of course, the customer. One Retail technology allows us to identify the customers in every point of contact, including their physical in-store presence. We see them before they actually make a purchase. Thus, our client, regardless of where they are physically, have the capability to benefit from both online and offline features with smart search and knowledge of the assortment as well as the personified product mix are available to our customers. We see the interest of those customers with One Retail experience. This takes us away from the classical sales fulcrum concept because each checkout translates into a new check-in or a path to that. Thus, we build a long-term relationship with the customers. An average ticket for One Retail customers is 1.5 times higher than those who are lacking this experience still. Or the frequency, it's 47% higher than the non-One Retail customers. Elements of the mobile platform and the One Retail technologies prove the same point, such as, let's take conversion. If you take the sales up, the conversion is 4 times higher than the other apps, or the clients app, it's 2 times higher, and it's 1.3 times than that they opt to make a purchase more frequently as compared to the other options other than One Retail. So we have 42% of One Retail customers now. In the midterm, we would like to ramp it up to more than 85%. And again, the total share of identified active customers is going to grow from current 19 million to 25 million in the midterm. Obviously, this is going to affect our numbers across all of the business model. Thank you, Dagmara. I suggest discussing the market and our customers. And the question goes to Mr. Oleg Vorobyov, the commercial director of the group. What's the feature of customer behavior in 2020 and your expectations for 2021, given the recent changes and the macro environment? Well, first and foremost, I would like to explain that 2020 established a very solid foundation for our growth in the future. We have observed a number of trends, starting with online development. Our online penetration generally in the market and with our company in particular was like 25% early in the year, while at the end of the year it was as high as 40% and with a good upside looking forward. Obviously, online was driven by such core categories as digital, which is about computers and everything gadget-related, entertainment-related. All of that was a good source of growth, a good point of growth for us with 20 or 30%. At the same time, we have seen a growing trend for staying at home. That means our customers spend a lot of time in isolation at their homes, and they would like to do that in comfort. They would like to set up a convenient environment which would be as comfortable as possible. That's why they start thinking about what equipment they're buying. They invest into quality. As a consequence, we see a major growth in premium products, which is again a longer-term trend looking forward. Another thing not to be overlooked is the fact that the growth in appliances was further the growth in electronic sales was supported by loan growth, like the share of mortgages went up by 50%, and that has translated into more money available and more demand for electronics. Speaking about the future, the penetration ratio of electronics is currently about 12,000 rubles per household, which is several times less than in European countries or in the United States. That's why we believe that's a huge upside opportunity for the company looking forward. To sum up, all the recent changes in customer behavior have established a major structural shift which would enable us to grow our sales and grow with the market and even ahead of the market. Staying within the same subject of strategy, Dmitry Skrabin from BCS, hello Dmitry, has the following question. Do we have as part of our plan one of our goals to maintain leadership in turnover in Russia? Dmitry has not seen this point in our strategy, and also they're referring to our competitor DNS, who suggests they have got ahead of us somewhat in 2020. Hence Dmitry's question, which competitive advantages are going to enable us to grow faster than the competition? So this question would come to me. Okay, it's always very difficult to forecast looking forward in terms of the market share, like what particular market share I would like to win. But clearly, from our strategy as follows, we are going to grow the market share. If you consider the growth of the market, it's about 50% for 4 or 5 years onwards, while we intend to grow twofold. So obviously, our growth would come above the market. Considering DNS specifically, there is one thing I have to say. We do focus on retail sales, first and foremost, while DNS has B2B business, among other things. Our focus is B2C. So we are definitely number one there by margin. And I would like to mark specifically the growth of our share in online sales. The 33% that we won in 2020 are a really huge value for the company. This is going to be a major element of the market's growth looking forward. We see how customers come over from one channel to another. I will definitely going to see more customers in the online segment. 2020 explains it quite clearly and proves it that we are very well positioned to capture that growth. Once our technology has ripened enough to enable us to move swiftly between physical offline sales and online sales, which we saw during the lockdown, and if you add on top our logistical backbone and our service quality ambition, all of that makes our proposition extremely competitive, and I'm confident with a high degree of certainty that we'll manage to grow our market share looking forward. Kirill Panarin and Nikolai Kovalov from Renaissance Capital and VTB Capital, respectively, have a similar question. It's about the growth of our online sales and the logistical infrastructure we might need to maintain the growth of our online segment. Here's the question: what resources are required to ensure that growth, and what we already have to grow? Again, the question goes to Alexander. I believe Katerina is better positioned to answer this one. She'll have a more precise response. Yes, thank you. Thank you for your question. Getting back to the presentation which we have just seen, I would like to remind you that the One Retail technology, the One Retail platform we possess is based on a novel role of the stores, which is of utmost importance. Our offline stores are a significant element, a very important element of our logistical infrastructure, which enables us to bring the goods to the customers within only 15 minutes, which is unprecedented in the market. It's not seen there at all. And if you consider our logistical capabilities, considering the fact that we have about 50% of all our stock or inventories in the stores, we thus are in a position of 1 million square meters of logistical infrastructure. Half of that is in fact our stores, and the other half is warehouses. Across many years, we have invested about 150 billion rubles into this infrastructure, and other players would find extremely hard to repeat it, to replicate. In the nearest future, we intend to expand our logistics even further with 4 additional warehouses. We'll keep opening new offline stores as well that are going to be the same logistical infrastructure role. So that's an important point we would like to highlight. So considering our capex required for further growth. Yes, thank you. Considering the capex side of all of that, as explained earlier, 50% of our capex would be spent on IT, and that is about technological development of our business overall. Starting from 2021, the share of investments into IT and technology is going to exceed 60% of the capex, while expansion of our store infrastructure would be about 20% of the total capex. In the nearest and mid-term future, we intend to open up to 500 stores. Nikolai Kovalyov has exactly a question about that. 500 stores, how that translates into square area of selling space, and what about the average floor space of every store? To extend on that question, we are going to proceed with multi-format new store strategy, so we'll be opening stores of various formats. The traditional format will definitely be there with 1,000 to 1,500 square meters of floor space, and then it depends on the city and the population density, of course. We have already established a new format, Eldorado 250. Sergey can comment on that as well. That's a new and a very successful format which we tested back in 2020. On top of Eldorado 2050, we'll be having Eldorado 600 as well, and also smaller floor space under the M.Video brand. And then it depends on the particular location and city and the type of that city when we pick the format. I would like to explain it as well. When we select a new store for opening, we're very particular about meeting all the target numbers, like our minimal IRR is 30%. That's our IRR target internally, and all our stores break even and pay back within less than 2 years. So considering our efficiency, we monitor that on a quarterly basis, and all of our stores are profit-making. Over to Sergey. Thank you, Katerina. Let me highlight specifically the following facts. In 3 years to come, we are going to open more than 500 stores. More than half of that is going to be the novel format mentioned by Katerina. That's Eldorado 250 square meters. We have been developing this product across the recent 2 years. With the help of this format, we are going to reach out to smaller cities where we see the potential. It's more than 500 cities with no M.Video-Eldorado store available as yet. So in 3 years to come, we're definitely going to cover more than 100 of those cities, and we'll be striving to cover 200. The new format, Eldorado 250, is already available. We have 25 stores already, and the expectations are the numbers are above our expectations, frankly. We have all the product categories available, and the experiment we're running, the pilot, in fact, is a success already. When we enter a new town or city, our online sales are boosted at least threefold, and we have on top the offline sales from the new store. That's how we expand into that market, covering their needs. The potential here is quite obvious, and in the 3 years to come, we intend to proceed down that path. A few questions to the commercial director, Oleg Vorobyov. Starting with our own marketplace, and the key question here is how we intend to develop our marketplace function and how we intend to expand from 75,000 SKUs to 250,000. That's a very exciting question, very topical, I would say. So that's a very fashionable trend these days, to set up a marketplace of sorts. I can tell you that we are well experienced in this field already. It's not about having a wish to develop marketplace. It is there, and we are growing it. We have taken it even beyond that. We have several arrangements in place which are part of the marketplace. One is marketplace proper, or per se. Another one is a vendor catalog, which is about expanded capabilities on SKU and price management. And obviously we have white label arrangement with the help of our partners. It's still marketplace based, and it's easy to scale up. We're definitely going to use all these three arrangements, and we intend to double the number of SKUs every year. If necessary, we can ramp up at an even faster pace. So far, the target number, we're talking about 250,000 SKUs, is merely a number that could be scaled up without any investment required whatsoever. I would like to focus on a different thing, though. This assortment would be complementary to our current core mix already available. With the current 75,000 SKUs, we have enough to cover more than 3/4 of the demand available in the market. So whatever we have on top, the additional SKUs offered to the customers would cover their additional needs and make us even closer to the customers and satisfy their needs even better. Oleg, let me carry on with that. A few questions about our GMV target of 1 trillion rubles. Considering the 3P sales platform, what's our expectation for 3P sales 2025, considering the GMV of 1 trillion rubles in total, and how we are going to target our market share in online and offline segments? Okay, let me start with the product mix first. Considering our vision, the target is no more than 5%. That would quite suffice. 5% out of 1 trillion rubles would come from 3P models comprised of the three elements I have just explained in greater detail, the three schemes. However, the potential is there. The upside is there, given we're not limited in resources. And if required, we could ramp up the 3P sales to 10%. So we can say that. Okay, then the next part of the question would go to Alexander. Well, what's our target share for online and offline sales in 5 years to come? And is there a risk that antitrust or anti-monopoly authorities would counter our ambition? Let me start with the second half of your question. I believe we're quite far still from the point in time when the anti-monopoly authority suggests we're too big and start doing something about it. It's the threshold is about 35%, and it will take us quite a while to get there, although we're definitely striving. Responding to the first part of the question, frankly, it's a tricky one. It's difficult to produce a response to for several reasons. In fact, targeting a market share is very much relative, you know. It doesn't happen like that. You target a particular market share, you arrive at that point and you stop. You don't need any larger share. Obviously, the company is going to strive to grow ahead of the market and win a larger market share. So far, we have been successful in that, and we'll keep moving in the same direction. Considering the online and the offline split, again, that's a relative thing. A few years back, that would be the right thing to target. While today we genuinely believe, and we're not trying to hide anything or conceal something, we frankly believe that the split you're talking about does not quite apply to our business. That's why we're talking about total online sales. And when we consider the path of our customer, the journey of our customers, in the presentation we mentioned that 3/4 of all customers use both channels, and the art of a modern retailer and the requirement for them to be competitive is about knowing how to work with each contact point they have with the customer. So carving out a particular market share and especially making a forecast out of that would not be productive at all. Our market share is 33%, let's say, but we announce it because everyone is talking about it. And again, there is a major surge in transactions out of store transactions, let me put it this way, with the help of our online platforms, so we register those and disclose. However, in our thinking, it's a uniform space where we have as seamless customer journey as possible. Okay, the next question would come to Dagmara then. We have touched upon it a little bit, but here we have a very specific question to the point. So what are the traffic drivers and also average ticket drivers? Well, obviously, working with our one retail customers is about these drivers. In fact, it's important to consider not like the transaction-based approach when we take or pick a transaction and see the average, how that compares to an average ticket, let's say. Instead, having introduced one retail platform with its mobile platform as well, we try to build a relationship with the customer, which in turn translates into rather frequent encounters. So it's not about a one-off average ticket. I mentioned it earlier today that it's 1.5 times higher for one retail customers as compared to non-one retail customers. It's about the frequency. It's about how often the client would come back. That's the key. Let me make a few comments here as well. Well, first and foremost, it's about growing in the premium segment. We're better positioned as a group to capture growth in the premium segment than growth of innovative products and services. That is going to drive the average ticket as well. And generally, if you ask me how we define success, we define success as growing the loyal customer base. That's exactly what Dagmara is explaining. We take anonymous transactions and convert those into loyal customers whom we can reach out to, whom we can communicate with and learn deeper their needs, so we are better positioned and to address those needs in a more precise fashion. That's how we're going to drive average ticket and also frequency. A few questions to Oleg, very similar ones. What's your position in wholesale operations? Any plans to expand it? And an adjacent question too, what do you think about working with developers, like providing equipment and electronics for apartments that they build and sell? Okay, wholesale operations, that's a rather obsolete term. We do have a B2B segment, which is currently an immaterial portion of our business. Let's not even talk about it so far. I can tell you there is an upside, there is a growth potential to that segment, and we're definitely looking at all the opportunities available here, taking our mobile platform into account as well. But these are not so relevant things, so to say. And the second or even the third part of the question, which is about working together with real estate developers, that's an exciting thing which we're working on already, and we have several contracts to develop that particular options. So these are very near contracts, and we see good prospects for us to grow commercially and for the customers to tackle like all of their outstanding issues with equipping the apartment. Okay, Oleg, to carry on with you, question about the brands.
По аналогии с продуктовым ритейлом, как задает этот вопрос Дмитрий Скрябин.
Dmitry Skrabin has come up with a question, what's our target with the brands, own brands like private label, as food retailers do? Well, frankly, developing private label products would be a new milestone in our corporate growth. So far, our business has focused on international established brands. 2 years ago, we decided to consider private labels a little bit deeper, and we decided to agree upfront why we need it. Our growth with private labels is based on a very good understanding why we need it. We are talking here about varying strategies for each brand, like M.Video on the one hand and Eldorado on the other would have different objectives they're pursuing. Without getting too much into detail, I can tell you that the total share of private label products currently stands at around 3%, and then it depends on the category, like 2% in household equipment, so 7% with TV, where first price products are in a high demand. But again, 5% of private label shares in the sales, would be just the right point, with a good balance for our customers, like the most affordable at a particular price level, and we wouldn't want to go too deep into a segment which was not typical for our business. We would like to focus on premium, we'd like to focus on innovative goods where we do have the leadership in the market, and all customers know it. Okay, next question comes from Maria Lukina. I understand it goes to Ekaterina Sokolova. Please comment on your 5 to 7% EBITDA margin forecast in the midterm, which is somewhat lower than what you have been demonstrating so far in the recent years. Thank you for the question. Let me start with the following. Historically, the company has had high margin number. If you consider what we had in the recent years, we always had this within 5 to 7%. It's no secret to anyone that competition is getting stronger in retail and in e-com as well. Our segment is no exception. We see more activity rising from marketplaces, so competition is getting stronger, and we are all witnessing that. On top of that, we understand that today the transformation is ongoing in the product mix side. As of recently, we have been investing significantly to develop digital categories, and with the digital products, the margin is lower than is the case with the traditional household appliances, large or small. So all of that affects the margins, of course. However, our company has always been, is, and will be, at least in the near future, confident in overcoming the obstacles, be it internal obstacles or external hurdles. We are always trying to be well prepared for any changes that we are going to face, like considering the product mix. Starting 2020, we have had different approach to digital products. Like, you know, we have M-Mobile zones in our stores where we sell not only mobile phones, of course, but also digital products and high-margin services and accessories. This approach enables us to counter that margin erosion. Considering the margins overall, we have a well-established relationship with our vendors, the suppliers. This enables the group to have a good purchasing power, thus maintaining price leadership on the market in our segment. And yet another factor where we have always been strong. We know how, and we have the skill of working with the cost side and also with the working capital. All our costs are a function of the GMV and the top line, so we are flexible, and it depends, of course, on the GMV. Even in the turbulent year of 2020, like you saw the numbers we had in the first half of the year, how we optimized our costs very efficiently. Generally speaking, we believe the number of 5 to 7% EBITDA margin is quite good because it is in the top quartile comparing us against the peers. At the same time, it enables us to ensure some good growth, which we have been discussing today, and offers a good return to our shareholders with pretty net income, and also we're going to pay a nice dividend, as you saw in today's disclosure. With all these three elements on hand, in which we have full confidence, we see no risk for the business whatsoever. We are financially resilient, and we're going to meet all these expectations. Question about goods.ru. considering our announcement to grow it together with Sberbank. Kirill Panarin is asking this: what's the point in keeping that partnership with Goods.ru, and why do we still need this minority share? Question to Alexander then. Let me start handling this question from a little bit different side, different angle, because we need to explain first why we're doing this, why we have brought in Sber, and why Sber is a partner with Goods.ru, and we maintain a minority share. The company is involved in constant experimentation, and I believe this one was an example of a very successful experiment. This enabled us to build up the knowledge base and the expertise. Now we understand much better how marketplaces work, how this channel operates. At the same time, we have arrived at an understanding that in order to compete successfully against a market that is well established with much larger scale players than Goods.ru, we would need to allocate a significant portion of resources to that. Hence the strategic choice for us, whether we need to invest into a market where we're strong and where we're growing and where we have a strong belief in the upside, or allocate that resource to Goods.ru. So we decided to go ahead with the option one. That's our growth strategy. In order to leverage on the potential of Goods.ru, we needed a partner who would invest heavily and take that into a different level. That's why. That's still a very interesting project as we think about it. Clearly, the opportunities are quite high there, and we see financial benefits to us as a minority shareholder. And it also enables us to keep in touch to understand how Sber's ecosystem works and how marketplaces are growing. Okay, another question to you, Alexander. It's about growing the IT competences, how we're going to double the IT headcount, and given the shortage of IT experts available. Private investor Maxim is asking this question. Maybe he's an IT specialist. I think it's very much to the point. That's a painful question for any company who is trying to undertake a transformation. We're not a naive market player, of course, who has some rosy glasses and believes we have built it all, and with infrastructure taking us to the brighter future. No, of course not. We understand clearly the transformation scope is huge. We need to take development from the external environment to in-house operations, because we would like to maintain all of the core competences internally. We're also faced with large-scale objectives technologically. We would like to develop one retail and detach that as a technology to migrate it wherever we need, as explained, and then we have all sorts of analytical tasks and data processing, logistics, and whatnot. We are starting a major program, and we need the resources. Bringing in the team, I don't think it's a problem of money. Money is not the major problem. And then we understand there is a consumer value proposition on the one hand and employee value proposition on the other. So we are going to make a proposition to our potential employees because the tasks we're trying to tackle are so ambitious that no one in the world has been able to resolve them yet. They're ambitious technologically, and they're ambitious in terms of scale. Having created this challenge on the one hand and having developed the team into a very ambient environment, you understand that IT is a very different type of people, to put it mildly. We have retail block, logistics block, and we have IT block, where the approach to motivation is completely different, and the approach to work is completely different. The competences we're trying to develop are completely different. Again, a combination of those elements is going to play an important role, like the ambition is there, and we'll be able to deliver that. So far, we're moving ahead quite well. Murat Prigimov from Gazprombank is asking a different question, which is very topical today, like any idea to carve out and IPO your online business? I recently had a nice discussion with a food retailer explaining exactly that. But with the food retailer, it's 1% of their business. In our case, it's 60%. A carve-out like that would be weird, unproductive, and most importantly, what we're trying to do now is develop a technology which gets ripe quite fast. And we add that on top of our logistical assets. Replicating that logistical network would require time, of course, but more importantly, money. The biggest challenge for our competitors would be to do that fast. So separating these businesses would not be feasible from the strategic standpoint. Instead, we're trying to combine them and merge them, leveraging all the benefits from the logistical network and also the brand, which is both brands are extremely strong, and the same pool of people, the team we're working with internally. So no, we're not going to carve that out. But if you would like to value that separately, you're most welcome to. Okay, thank you, Alexander. Another question to Ekaterina on the services. How we're going to develop our services, where we would like to integrate with the payment system, what other options we have on the table in this area as part of our strategy. Thank you. During the presentation, we have explained it that the service element is a major growth point and represents a major opportunity for our company. I have discussed it as well as part of my presentation. We are the leader in selling services when it comes to comprehensive propositions to our customers. It's no secret that we are the leader when it comes to credit or loan proposition. Like up to 20% of all transactions are there because clients have the possibility to have access to leverage. Our credit platform is unique on the market because it's a marketplace in itself, helping us to connect the customer with 12 different banks. And customers would then be able to see competitive offers of those banks and pick the one that suits them at best. Obviously, we offer other services related to installation of the products we sell. In fact, we sell rather intricate goods technologically. That's what makes us different from marketplaces like fridges or, let's say, TVs could not be left on the porch or at the door. They need to be delivered into house or apartment and also installed properly. Referring to our numbers of 2020, we had 5 million visits into the homes of our customers, and we made about 500,000 complex installations. So by reaching out and communicating with customers in that way, we can also ramp up the share of identified one-retail customers, as mentioned by Dagmara. But the potential is colossal, I can tell you. It's huge. And we are going to undertake an effort to ensure that our transactions are convenient. We are going to strive to offer additional options for payment services, and we are considering varying partnerships, and we're open for any proposition. Just to develop on the same subject, Ekaterina, can we consider establishing a fully fledged ecosystem with subscription services and up to multi-category marketplace, maybe? Well, speaking of the marketplace, I believe Oleg has explained it quite well. We're definitely suggesting that our strategy is about leadership in our segment, which is about consumer electronics, which is our priority. Whether we see good opportunities in other categories, yes, we do see them. Have we included it into our strategic financial model? No. Do we see a potential here? Yes, we do. What's important for us today is to get all growth points that we have been discussing so far with one retail technology and the platform which we are going to scale up within consumer electronics. Whether we are going to experiment in other segments, yes, that's our intent. We are going to experiment with other categories. However, the focus would be on our segment. So good things come in time. And finally, a question about the dividend policy disclosed today. It's about Sova Capital, Artur Galimov, who has some appetite growing as he's eating, like our current wording is at least 100%, suggesting that we can be paying more than 100% because our leverage is less than 2. What's your say, Ekaterina? Well, we have mentioned it a few times today. We're definitely inviting all investors to participate in our growth story and the future success, which is upcoming, as we believe. And it's about a combination of three elements: A, growth; B, sustainable margins; and finally, C, shareholder return in the form of dividend payout. That's unprecedented promise of 100% net income. You're quite right there. If you consider our strategic model, well, we have some cushion, of course. We have always been financially resilient, and we have some cushion on the leverage side. With the leverage of 2 as the ceiling, we are not hitting that ceiling as we grow within our strategic model. There is some cushion still available, and the promise of 100% net income is attractive as it stands, and we'll be trying to pick the right balance between capex on the one hand, growth on the other hand, and dividend, of course. A few questions, quick questions. Given our leadership in the market, do we see consolidation opportunities, and whether we would like to penetrate into other countries? Alexander? Not as yet. Consolidation, the consolidation bit of it is kind of strange question. Frankly, we are not particularly looking to consolidate players similar to us. However, we may well consider acquiring a service company that would add some additional opportunities for us, but whether that's expansion or consolidation, I'm not sure. Penetrating into other markets and other countries, well, to do so you need to understand what you come out with. You always believe the grass is greener there, but it's not unless you possess the right tool to capitalize on it. We hope that One Retail matures after some time and becomes an instrument that would enable us to consider such opportunities. Next question to Oleg. Do we intend to work together with marketplaces looking forward and sell our goods via marketplace? I understand Ozon is implied here. You see, we're always trying to consider various additional points of growth, like our company propagates the self-improvement culture continuously. So the experiment we had with Ozon in 2020 is just an experiment which enabled us to gain some good experience, colossal experience, frankly speaking. In fact, we obtained a large scope of knowledge, which has now enabled us to focus on certain other elements of our operations, like developing our own marketplace. We definitely work with marketplaces. Our products are available with Yandex, as a bulletin board of theirs, like we're getting traffic from them, and we believe that partnership that works well for both partners. So we also work well with goods. It's not about marketplace focused, but we get support from them too. We have white label products or click and collect model, which is a unique technology with some bright opportunities looking forward. So we're definitely going to look into additional options and opportunities they present, but again, it must be feasible first and foremost. We analyze, we look into that, and we're open to new things. I'd like to carry on with you. Last year, as we hear from one of the private investors, last year it was difficult to get possession of some goods. Why was that? Was that a delivery service interruption? And what's the current situation with inventories and availability this year? Well, admittedly, this problem was there, especially in the second half of last year, when the lockdown has really boosted demand for laptops, let's say, and there was shortage of processors and also screens, which translated into shortage of TVs. To a degree, that affected smartphones. Obviously, there was some volatility on the market on the macroeconomic scale, hence the shortages. Generally speaking, the market is a very adaptable thing. It easily adapts to change. I can tell you, I can't say that there is never going to be any shortage looking forward, but the situation has stabilized, and that is a general comment of the market. Considering our business in particular, I believe it's important to emphasize that we're different from the rest of the market because of A, scale, first and foremost, and also B, relationship with our key suppliers, the vendors. We have multi-month planning. We're planning for several months ahead with our vendors, so we plan our business well ahead, and in case there is any shortage on the market, we even those out quite well, although at certain points in time, as we hear from this private investor, it may happen that we don't have a product. That's why we're looking for other channels in developing those. Hence the 3P marketplace. Thank you. Sergey, over to you. Why is Eldorado growing faster in GMV than M.Video? Well, first of all, it only started last year, and the numbers are very comparable. In fact, the key reason behind it is about the concentration in large cities. So, M.Video is in large cities, Eldorado is about the regions first and foremost, and then the lockdown has affected the business too when offline stores were closed, while Eldorado has more standalone stores which we could still operate with the malls closed, and that has translated into better performance of Eldorado. And another thing, all of the best malls have M.Video stores in them, and the large malls have been more affected by the lockdown. The shoppers who could potentially go with M.Video unfortunately couldn't get into their stores. Sergey, to carry on with you, we have already touched upon Eldorado 250 format. Other growth points? Maybe for Eldorado, well, the most important one is what Dagmara has talked at length about. The one retail technology. All of our team is really longing to roll this technology out with Eldorado. What Dagmara has explained, like growth of the average ticket, the conversion, everything, we are prepping hard now to capture that growth as a next step of our development. Katerina, next question to you. What are we going to do to cut the cost looking forward? Okay. I have explained it today already that our model is unique here. A major chunk of our costs is variable, which is a difficult thing to achieve. We can work with the costs and manage those depending on our GMV dynamics, and we have a huge flexibility when it comes to that. In 2020, we managed to optimize the costs to a great degree, talking about personnel costs as well as lease expenses. We have renegotiated with like 90% of all our partners. All of this happened during the lockdown, and we restructured our contracts to make the price dependent on the top line. So, on the average, we intend to grow above 15%, which is 3 times the market growth. We definitely have a major effect from the operating leverage and the economy of scale. Further to that, we have 2 brands that helps us communicate with customers. We are in a position to reach out to a broader group of customers, but we have a single back-end infrastructure. We have uniform logistics, and we have uniform infrastructure for the vendors, the same commercial function. Given that scale of our business, the scale economy is definitely there to facilitate us. I would like to explain the logistics specifically. We talk a lot about our stores. As part of this presentation, I would like to explain the logistical costs separately. I would like you to remember a few numbers from this presentation. Thanks to the fact we use our offline stores as parts of the infrastructure, our logistics is extremely effective. Our logistical cost per order is only about 220 rubles, as low as that. You may know that some marketplaces have the costs double that number. Our logistical costs are only 2.5% of our average ticket, whereas marketplaces have it in excess of 15%. The economy of scale and the use of all our infrastructure, including the stores, enables the business to be more efficient. And we're not going to stop there. We definitely have more optimization upside in the future. Just to carry on with the costs, let's explain the capex. IT capex in particular. I believe Ekaterina and Dagmara can handle this question jointly. Could we expect the per unit costs to come down when it comes to IT because you have more in-house developments? Thank you. Good question. Early in the session, I mentioned it that we are going to spend money on IT and technology. I would say technology rather than IT because we're going to have a broader technological development, and we're going to spend more on that than before. Like in the past, we had 50% plus of our capex streamed into technology, while now it's going to be in excess of 60%. Technology includes IT and generally the technological platform. Whether the per unit costs are going to come down, of course they are. Well, we're going to undertake action to get more efficient in establishing our infrastructure, and we definitely have the intent to change our infrastructure to a degree. Let me follow up on that. Not only when it comes to cost optimization, but also the space of development, what they call time to market. We are going to focus that expertise in-house, which is going to shorten the time to market. And secondly, the company has undertaken effort to transition to what we call product approach. Now we have that in place already with product teams in place. This saying about the two-pizza team. Well, in fact, it allows the team to understand rather quickly which things need to be implemented and deliver them fast. On top of the optimization mentioned by Ekaterina, we also have a much faster time to market for all developments as part of one retail platform. I believe it's important to consider not plainly the cost side, but comprehensively the benefit we are getting from cost optimization on the one hand, and also the top-line growth on the other, with the key growth drivers coming from these changes. Just to develop on the same subject, could we expect that your IT solutions developed in-house would be used not only by your business, but also sold to third parties? This is probably more strategic questions like whether you could potentially sell one retail. And that's a valid question, a very valid question. That's exactly our vision about developing that architecture. We would like to make one retail technological stack detachable so that we could carve it out from the company, and within 6 to 12 months ahead we are going to consider the feasibility whether we could sell that as a service or alternatively integrate third parties with our logistics. Like, we're going to consider approaches or how this technology could be taken beyond M.Video-Eldorado and beyond consumer electronics. Thank you, Alexander. Artur Galimov from Sova Capital is also asking this. What's your consideration about an SPO? The key element of that abbreviation is S. So you're not supposed to ask that to the shareholders, right? It's a secondary offering, so it's not the management team, it's the shareholders. We're not in a position to answer that question, but generally speaking, the higher the liquidity, the better it is for the shareholders as well as the company, because that is effectively the value of the company. That effectively is a better reflection of what the company is worth. So we are very supportive of that, but it's up to the shareholders. Again, getting back to the strategy, reverting to that subject, which risks do you see in implementing this growth strategy? Which are the ones you would like to highlight? Ekaterina? Okay, and that's a tough one. That's a tough one, so true. Okay. Just like I said, our strategic model is very well balanced. What I can do now is try to reinforce this confidence with investors and analysts. We definitely have significant resilience within the strategic model currently in place. We believe there is a broad set of growth drivers which have been explained several times today. One Retail and the mobile platform are going to yield some very good fruit in the mid-term. That's going to deliver exactly the growth numbers explained during the course of this presentation. And considering the leverage, the threshold of 2.0 is the one that we have in the strategic model, and that has a good cushion built in. On the capex side, it's limited amount is portion of GMV, which is it's more than 2% of the GMV, which is comparable to what we have been investing into our infrastructure. So we offer organic growth opportunities, but that translates into growth 3 times ahead of the market with sustainable margins and high dividend payout, dividend return. The risk is always there, of course. However, we believe the company is extremely resilient financially and will be able to tackle those risks. And the example example of 2020 is a great example of an extremely turbulent year, and we managed to grow our online business by more than 109%. So we got to 33% market share, again growing above the market, and that gives us confidence. Yeah, I enjoy speaking about the strategy, can talk about it for hours on end. Well, frankly, what Ekaterina is explaining, any set of risks could be grouped and ranked. And what Ekaterina is explaining, the availability of resources only represents a limited risk. We believe that our financial model and the organic growth we have with our infrastructure well in place, and the aggressive growth, or rather not so aggressive growth of that infrastructure suggests that risks related to that element are rather limited. Another group of risks is market risks. Of course, here we have certain assumptions built into our models. We have certain expectations from the markets, and we have considered several market growth scenarios from +5 to -1%. But again, will be sustainable financially. If the market faces some very huge headwinds, the growth pace would be different, but that would be natural. So the market risk will always be there residually. However, the low penetration ratio, growth of innovative products, and additional upside on the services, what you now know from our strategy, all of these create a rather broad set of opportunities that are supposed to work well. If not all of them, then at least a major portion of them. Finally, the last group of risks, which is about our capability of implementing the strategy. Of course, you can make a lot of plans which would stay on paper for several reasons, for various reasons, but the history of our business would make you optimistic, because this company really knows how to deliver. When I joined this business as the CEO, I talked to the market. I discussed this with the analysts, of course. So the reputation this company has externally, it's about addressing all the challenges and delivering on its promises, which is quite right. That's a fair assessment, and that's I saw when I joined this team. The degree of granularity with which we have worked on this strategy suggests again that the risks are not plentiful. This might sound ambitious and even not true to life to a degree, like you're talking about a twofold growth in 4 or 5 years with significant return. This would nearly never happen. Nearly is the key word here. In our case, it's going to be like that. I'm confident it is going to be like that, and we'll be able to make it. We have 2 questions, both pretty much on the same subject. One would go to Oleg. Mr. Alexei Filipov from JP Morgan is asking, what are the vendors thinking about marketplaces these days? They having more business from the marketplaces, and how that affects our purchasing power? That's a great question. It really allows us to dot the I's and cross the T's. Of course, the vendors look up to the marketplaces. They considering the market developments and online, and they're watching us, of course. That's exactly what I'm hinting at. We are growing the online share ahead of the market, so when they're thinking about online, they first and foremost think about us. Considering the marketplaces, well, so far their share is irrelevant, with 5 or 6% only, and the largest player in the marketplace segment has a little bit more than 1%. The purchasing power is about when you are in a position to buy something. With any marketplace, well, like half of the sales is 3P sales, like there is no purchasing power, there is no link whatsoever. It's coming from the merchants, which comes as a formal product proposition, so we cannot be talking about any purchasing power at all to be considered. On top of that, we must consider the quality of service available from the marketplaces. When I say service, I mean sales, of course. In our case, we have complementary sales with lots of services and a high portion of premium and innovative goods. However, marketplaces, fortunately for us or unfortunately, they are not in a position to offer even a small portion of what we can, so it's a totally different weight category to compare. And one final question for today, what's your competitive edge on the marketplaces? And I'm looking at Alexander, that means this question would go to him. Well, I would be happy to invite my team to contribute as well. Frankly speaking, what Oleg has started with, our relations with the vendors and what I talked about during the presentation, our capability to offer a service to the vendors that would be hardly replicated with marketplaces is probably the best competitive edge we have. Secondly, our logistical infrastructure is much ahead of any marketplace in Russia, and it would take years and billions of dollars or hundreds of billions of rubles to replicate this infrastructure. And that infrastructure is not there for its own sake. It's all about competing for fast and precise service, like when clients have their needs, and we would like to target 15 minutes. So in 15 minutes time, the particular order must be ready for pickup in store or shipped by taxi or whatever, and replicating this level of service would be extremely difficult. Thirdly, we're talking about support, which is unparalleled in our case. Starting with one retail platform which enables us to have predictive data, and most probably my marketplace would have enough data to do the same. However, this shared responsibility and expert support in decision-making would be extremely difficult to replicate. So I believe that a combination of these factors would make our position very, very solid. So traditional market players would have more than 60% in the mid-term, more than 60% of the online consumer electronics market. I would like to follow up here as well. Our expertise in this business and this market, the segment of this market, as an example, back in September, like in September every year, you would normally follow, or at least know the date of a new iPhone presentation. However, our segment is much vaster, like kitchen appliances, personal care, whatnot. Like there are many brands launching lots of innovations every year. Considering the customers' needs and the products they may require, making the right proposition would come from years of experience our employees have, which is unsurpassable. And just another quick follow-up. We explained that in the presentation, 85% of our customers use two channels when they're making their decisions, both online and offline, which is of utmost importance. Please be reminded, our average ticket stands at 9,000 rubles, while the marketplaces would have it at 2,000 or 3,000. Obviously, they sell simpler product categories. Our products are more intricate, more technologically advanced. Considering the customer experience that our shoppers have, they have a demand for expertise. They are in demand for contact with our employees in stores, and now we can deliver that via the mobile platform too. Exactly, considering the mobile platform, I would like to focus here specifically on the role our in-store employees play, and Alexander has touched upon that, and Ekaterina as well. Indeed, there is a certain degree of responsibility that customers would like to share with someone when making that decision. So that's our employee, and that's why we're better in the premium segment. You can see its share in our sales. It was part of the presentation, and also the upside it's going to have in the future. And another very important point on the role of One Retail and our employees in the stores. Now they have an employee app which would allow our employees to go beyond the store limits. Now we have digitally assisted consultations when the employees would be in a position, with the help of their mobile app, with their employee app, to help a customer make a decision, can work regardless of where the contact is. It could be face-to-face in store, but it could also be a different situation, like in the mobile app on the web platform, or even when calling our hotline. You have seen that with our numbers. These digitally assisted consultations in 2020 contributed about 9 million contacts in total. In the future, we expect it to go up to 16 million contacts a year. So that's a broad opportunity for our employees, which also adds to customer satisfaction. Thank you, colleagues. I would like to thank all of you, ladies and gentlemen. It's nearly 90 minutes, more than an hour. We have been trying to answer your questions. These have been very smart, very much topical. Some of the pressing issues, we're not ending this dialogue, of course, less than in a month's time from now, on the 4th of March. We're going to disclose our financial results, have an event as well. Webcast, recording of this presentation on the strategy day is going to be available on our website, M.Video-Eldorado.ru. So stay in touch. You can write a call. We're always happy to reach out. Thank you.